You're looking at a daily chart of the Nasdaq. I backdated this so I could show you the just the trend here from November of 2021 till October 13th of 2022. The Nasdaq lost 37% in a clear downtrend. Okay, it traded below this black line, which is the 200 simple moving average, for more than a year. And I'm going to fast forward this on the front date here so we can take a look and see how the Nasdaq, after it made this low here on October 13th, it retested it again a couple of times. It didn't come down and touch it, but it retested it here at 10.262, 10.207. Okay, so this is like a bottoming, just a bottoming pattern. But shorter term, like I showed you the longer term downtrend, shorter term, since January, it's up 13%. Okay, it traded 15% from January 1st to February 2nd, then it gave up half of that and a 50% retracement. And now it's in another uptrend since this date here. Let's get the date correct, would you please? It made a low here, and this thing's not going to cooperate. I'm just going to move on. Okay, and it's just making another high here. Not a high. It's trading higher. After it traded down to 11,000, it's trending higher. I don't know what's wrong with Market Smith. It's been acting up on me lately. But anyway, that's okay. So I just wanted to show this. This is a bottoming type pattern. It's up 13% this year. It's got a lot of people frustrated because there's a narrow leadership, just a few, not a few, but there's a narrow range of stocks that are driving the index higher. But definitely, you know, this is a trend higher, this is a trend lower, and now we're trending higher again. And before I get to the stocks that are driving it higher, I wanted to get to the IWM, which has fallen off. This is the Russell 2000 ETF, and it's kind of a risk on type of index. But the problem with this is it's got 16% exposure to the finance, and I'm not touching the finance. I just wanted to show you that it's bearish and it's negative. It's not because the small cap stocks are just getting killed. It's because of the financial component of the Russell. Anyway, what's driving the Nasdaq are these mega cap technology stocks. Apple kind of looks similar. It had this uptrend and pulled back, and now it's trending higher again. Tesla had a nice run off the lows, 101 to 217, then pulled back to the 50. And now it's having trouble with the 200 where it had trouble before. That 200 is becoming a bit of a problem for Tesla. So we'll see if it could trade above that. But the one stock that I'm interested in the mega caps is NVDA, and this one's just blasting higher. And this is a nice trend. You see the 10, the 21, the 50, and it's got the blue dot, obviously, so it's got relative strength, NVIDIA. And I'm just going to show you today the stocks that I own, or the ones that I like, or the ones that I want to own, or the leading stocks at MC Stock Charts. Our watch list stocks have been performing really well. I'm ecstatic with them. Not ecstatic. I'm happy with how things are going. ELF, though, is one of our leading stocks, and this is made a new high today, and you can see that it's just kind of a stair-stepper stock where you know, gaps up after earnings, goes flat, you know, gaps up after earnings, goes flat, gaps up after earnings. I shouldn't say flat, it's trending higher. It's trending higher. You can tell by the 10, the 21, and the 50 are just trending higher. Beautiful trend, made a new high today. You know, you got to love that type of a trend. Here you can see the cup-shaped pattern, the breakout and trading higher. It's up nearly 4% this week. Any stock that's up 4% this week, we'll take it, right? This is Arista Network up 3.75% this week. You can see the consolidation here on the weekly, but on the daily, you can see the cup with handle pattern traded down to the 21. We had this on our watch list, but it's extended now. And then you can see the nice 10, 21, and 50 are stacked nicely and is just trending higher. It's got relative strength, and that's what you want to see in your stocks. Lattice Semiconductor, this is a thing of beauty here, where it broke out with a cup with handle. I got to go back to the weekly. Yeah, more than 5% this week with increasing volume. You got to love that. You can see the cup with handle pattern, and right now it's just finding support at the 21. So that's a thing of beauty. Same with Allegro. They have the N with new products, new highs. What's not to like here? You can see the base on base pattern, and then finally the breakout. Yeah, we got this one on our watch list like a 34 below it, pulled back to the 21, and it's just trending higher. Finding support at the 21. I mean, that's a thing of beauty. You got to love something like that. SMCI had the shakeout with the short report, rallied back through the 50s when we got into it. It kind of trading wide and loose as comparison to last year, but the stock's making new highs, so you got to love that. And with heavy volume, like the old saying goes, that's not Aunt Sally buying. Look at those big blue volume bars up 19.37% this week. Thank you very much. ACLS, another one of leading stocks. I'm not even looking at other stocks. I'm just looking at the leading stocks at MC stock charts. I mean, there's no reason to trade elsewhere or look elsewhere. We got the leaders here, and this one's just trending nicely with its 21. I know some of you picked it up today on the pullback. It made a new high, then pulled back, and good for you. I own that stock as well. Looks really nice. PERI on network. This is commercial services advertising stock. You can see the long period of consolidation and the big blue dot on the weekly, up nearly 8% this week. We'll take that, making new highs. Thank you very nicely. AEHR, they have earnings next week, so be careful. It was up today with volume, but you can see the weekly chart. This is still a nice consolidation here. Oh, late stage basis here. Okay, late stage like SMCI. So we're watching that one. It had a nice week this week. Nice day today, I should say. Made a new high. Yeah, you gotta love it. NVO, Novo Nordisk. This one, be careful here. This one has a gap. A couple of gaps here actually at the 143.77 gap. Earlier in the week than today, it gapped up from 148.32. They go ex-dividend. I can see it's down in after hours. So, if it comes back to 143.77, that might be a time for me to take another bite. They have new highs, new products. They got the N in Can Slim. ONON, another addition to our leading stocks, and why not? First of all, I love footwear stocks, and I'll get to that later. But I also like stocks that break out with cup with handles, and this one did so nicely on Tuesday, up a cool 26%. It's up after hours. It's up 42% this week. So congrats to the longs. I doubt if that one is done after a move like that. CROX is another one. This one's not getting the love of the Deckers and the ON because it's got debt. I got to go to the weekly here. Dig a little deeper into CROX. It's got because it bought Hey Dude, which is doing very well, but they incurred a lot of debt. So a lot of debt in a high interest rate environment, makes investors pause for concern. But I believe they're going to grow their way out of it and pay down that debt pretty quickly. It's they're going to earn, they said, between $11 and $11 and $31. So this probably means about $12. With $11, with 11 PE, $11 of earnings makes it $121 stock, right where it's at. But if it got a multiple like Deckers, which is at 23 multiple, this would be over. CROX would be a $250 stock, but it doesn't because Deckers has no debt. It's got cash flow and return on equity, just like CROX, but and it's got earnings. But like I say, if it had the multiple, if CROX had the multiple of Deckers or ONON, which also has no debt, little return on equity and cash flow. It's just a young company and only are going to earn 38 cents this year. But the point is the debt. That's what's holding back CROX. So if you own CROX and wondering what's going on, it's only up 15% this year. And it's having trouble with its 50 simple moving average. But so it's going to take a couple of earnings reports, I think, for Wall Street to believe the story that Hey Dudes is selling, and they're gonna, the CEO really is a sandbagger. He said $11 to $11.31. It'll probably come in closer to 12 this year, and I believe CROX is still a leader and will eventually trade back through that 50 simple moving average. Anyway, those are the leading stocks. This is done for my amusement only. Do your own due diligence, and we never give up.